Welcome back, everybody, to another episode of Built to Grow. And today's guest is Robin Klinghagen. And Robin is a salt expert. And for our audience, we're going to be deep diving on the topic of salt, state and local tax. Actually, real quick, Robin, the full acronym, tell us what it all means there.
Sure. State and local tax. Well, most people think of salt as your table mineral and something I certainly enjoy with my food, but it's an acronym for state and local tax. And state and local tax is encompassing of several different types of tax that at the jurisdictional level. You can have state and local income taxes, sales and use tax, property tax, withholding. If you've got pass-through entities, you've got withholding issues and composites. So there literally are, I think, 12,000 sales and use tax jurisdictions that have their own taxing rates, and just there's a lot of different jurisdictions that tax.
Yes, absolutely. And so glad to have you on the show today because um, I think this is one of these little areas that a lot of businesses don't think about. And I think the complexity grows, especially when they begin to expand into multi-state operations where for food and ag business owners that, maybe they're going and buying property and they're setting up operations and becoming domiciled in another state. And a lot are doing that, especially as available, farm ground and farm properties and available production land is starting to become more minimized in certain areas due to water regulations, et cetera, and just viability of those operations. They have to move elsewhere. And I think, each one of them is facing that, hey, they knew what their state, jurisdiction allowed or their local area, but all of a sudden there could be, this whole can of worms that opens up by moving elsewhere, right? And so, I'm really excited to have you on today because this is one of those very nuanced areas that I just don't think a lot of people really consider, but you have to be really compliant in this and you have to nail this. And by not considering this, especially for those considering investments in other states, that by not considering some of these things that you could have, diminished returns as a result of not understanding what you are required to pay and what you are compliant for. And so super excited to have you on, Robin. I know that to some, this isn't the most exciting, topic to talk about, right? Especially we're recording this, y'all, 2 days after tax day in 2026. So, this is such an exciting time and topic for so many people outside the tax world, right? But just very grateful because I think that this is underestimated, and having your expertise on this will be really, really good for our audience. That for our audience to understand, Robin Klinghagen is a salt tax partner or salt partner with Andersen, a international tax consultancy firm. And so, super grateful to have you on, Robin. Can you give us a little bit more about your personal background? That what got you to where you're at today? What has made you a salt expert today?
Yeah, absolutely. I kind of stumbled into it. I think you stumble into state and local tax, especially, I've been doing this for 30 plus years. And 30 plus years ago, they didn't even have classes on state and local tax. But I started my career in industry, and the business operated 50 states. And so just by virtue of the business that I was in, did that. And started up the tax department that company, and then, just wanted to learn a little bit more, so I ended up moving from the roots of South Dakota down to Houston and joined one of the Big 4 firms, and focused, again, specifically on state and local tax. You really get a lot more technical in that area. Went to a regional firm, had my own firm, and now I've been with Andersen for 5 years, a little over 5 years, running the Houston office, state and local, practice, along with our commercial practice, so, in the Houston office. So, yeah.
You did expand upon it at the beginning there for us. That I guess, because I think the definition for me when I first started, walking into, complex, salt issues was like, first of all, how do you, and we're going to dive into this, is how do you navigate the help that you need? And, you need good help, but first you even have to understand what all does salt encompass, right? And I think you highlighted at a high level, but can you go a bit deeper for us that what all does salt encompass? Because, you talked about local income tax, et cetera, but like there's so many layers to this, and like you said, I think the number was 12,000 different jurisdictions, right? So, yeah, can you expand upon this? Like, what all does SALT encompass for our audience?
Yeah, and that 12,000 jurisdictions is, 12,000 that, for sales tax purposes. I think there's something like 90,000 jurisdictions that, because it's your state, your county, your city, your school districts. I mean, it's total jurisdictions, at any state level that have the ability to impose a tax. So you may not be thinking about, going into another state and you've got, property tax that you have to think about. And there's some great, incentives in that in some of these areas as well if you're going into them. And if you do it with the foresight of like, hey, I'm going to plan and think about where I want to go, you could do some saving on state and local tax, in doing it. So I don't know if I'm hitting on your topic about getting deeper into it, but it's just at starting a business in a certain city, there may be business license requirements, and those are kind of fall underneath the umbrella of state and local tax. There's just s- in every state and every city is a little different. And I think that's probably where the biggest hurdle comes in is because you'll have a business who's gotten familiar with what they need to be doing in their state, and they go and they expect it to kind of be the same, and it's completely different. Each state has its ability to set up its own tax regime. So some states will tax, income tax more heavily than, say, they will businesses or vice versa. Texas is a state that gets about 60% of its revenues from the sales and use tax, versus, California and New York are getting more of theirs from the income tax base. So it's you've just got different tax environments depending on where you're going to be going.
I think you did provide the good umbrella there that there's just so much encompass that it could be from, hey, you've, set up a domiciled office in a particular location, you're going to face local municipal taxes. And I mean, even for myself on a personal level, like, I mean, to break it down to, tangible terms, it's like I'm from California, from a very ag, oriented part of California, moving to Texas, and the fact that in California, you just had one property tax bill, right? And then here in my county or my jurisdiction within Texas, I technically have three different forms of a property tax bill that are all related to property tax, but all the different entities based upon, the school district, the water, et cetera, and the state. And so it's just navigating things like that, that when we first came and bought our home out here, we had to have that explained to us that why are we receiving three different property tax bills that we thought that we already paid one, that why are we now receiving two more? And
And
that
I'd rather pay
understanding
this
that,
one's a little lower than the last one
yeah,
I paid.
exactly. Yeah, like, I really like the assessment value on this one over here. But to that point, it's this that, especially for businesses that are considering, expansion, I think what I want to understand too is because this makes sense a lot to me, for businesses that are looking to open up offices and actually own property, in other states. But I think where this gets complex, even in my brain, is, and I come from a background too that, we would sell fresh produce, and we were, at least in California, we were sales tax exempt because we would end up selling to the final wholesalers, retailers, that they would be responsible for collecting the sales tax, right? And so, we had exemptions on when we bought packaging. We didn't have to buy sales tax on packaging. We didn't have to collect any sales tax on the fresh produce we would sell. But, walk me through instances where, outside of setting up new ag operations elsewhere where you actually own property, you buy farmland, or you set up an office, et cetera, in another, jurisdiction, what are other potential risk areas might be the wrong word, but, tax liability, issues that may arise from shipping products and goods across different jurisdictions? Like, what could be at risk there? What should ag business owners be thinking about?
Yeah, absolutely. So in 2018, there was this little US Supreme Court case called Wayfair, and that, drastically broadened the complexity for those individuals that were shipping even just tangible personal property into another state. Basically, what that, case was about, was, Wayfair didn't have a physical location in South Dakota, but, along with a lot of, Amazon, Wayfair, a lot of marketplace, shipping product into the state and South Dakota. And the reality is when those individuals are receiving the product, they should be, putting a use tax on that. Well, for a state to go after each individual is not practical. And so the state came out and said, "Hey, you know, Wayfair is getting an economic benefit from the people in the state of South Dakota, and therefore we should be able to require them to be collecting tax on these individuals and remitting that to us since they're gaining this economic benefit." Went through the powers be, the US Supreme Court said, "Yeah, we agree with you." At that time, then South Dakota, since it was a South Dakota case, they said we're going to set the dollar threshold if you sell $100,000 worth of product or you have 200 transactions, meaning like each invoice can be a transaction into our state. You now are subject to the responsibility to collect and remit sales tax into our state. There are only 5 states that don't impose a sales tax, and every single one of them has now, legislatively adopted some form of Wayfair. Some states, California, New York, Texas have a higher threshold than the 100,000, and a number of states jumped on board with the 200 transactions. Some of those are starting to drop that. But what it means for businesses that aren't establishing a physical presence but are selling property into a state, they now have to monitor their sales into that state to see when have I exceeded that threshold and do I now have some responsibility. And to your point, even if you don't have even if you're getting exemption certificates for those transactions. There's some states like New Jersey, they don't care if you have taxable or non-taxable transactions going into the state. You have a registration responsibility and reporting responsibility, even if you're not actually going to be remitting tax. Not all states are like that, but again, you run into this. Okay, so what does it mean for this state? What does it mean for that state? Um, and so it's and in some cases you need to, if there's depending on how the shipping, if it's going from one area to another, if they're, doing any kind of drop ships, um, in order to do drop ships, you sometimes have to be registered in a state in order to be able to issue, resale certificates and all of that stuff. So it gets a lot more complicated than well, we don't have any property or payroll in there. We're just shipping product. We're fine. You've got some protections around income tax purposes for that point, but sales and use is, with Wayfair kinda taking that out.
I think the reality of, what could be at stake, like, I mean, say, because so many food and ag business operators are not huge margin, right? And so, um, I mean, I've seen fresh produce companies with 150 million top line sales with, regular is $2 to $3 million worth of net income every year, right? So, I mean, this is not a high margin business for many of these operators that, the value return for many of them is appreciation of some of their farmland and assets over time, right? And but all that said, like, what could be at stake that if they don't have, if they're not pricing their products and services appropriately into a state that, does end up requiring, some sort of sales tax to be applied, like what are some of the rates of sales tax? Like what are some of the highest rates you've seen that, can be levied that we could be considering that, say, if they sold $100 box of citrus somewhere, like, or, a direct to consumer carton of meat or whatever the case is, what are some of the tax rates that could be considered here?
I wanna say probably the average tax rate's probably creeped up to around 7, 8%, but there are some states that, have both, state and local, where you can get up, 11, 12%, on them, and you just don't wanna be surprised by that.
Yeah, I mean, that rate, and I wanted to hear you say, but yeah, that rate is not even what, some of these companies' net income is. Net income is a percentage of sales. So if they sold enough product into the wrong jurisdiction, they could completely wipe themselves out, right? I mean, they could be a break even or worse. And so I think that's what I'm really trying to highlight for our audience here is what's at risk that, making sure that you're properly compliant here, is important. And I think what I'd love to understand. Sorry, Robin, you wanted to say something?
No, I was gonna say, when you say stay compliant, one of the big things too that companies don't think about, they know that they're selling to a distributor or a retailer that's going to turn around and sell, and so they know that they're not the ones that are responsible for tax. But you need to make sure you're collecting that exemption certificate. That is one of the biggest things that I have found, when I'm going through audits and that is you don't have that exemption certificate or you don't have a properly executed exemption certificate. It's not an exempt transaction. You now made a sale and you're going to be subject to the tax on that. And the importance of having that process in place at the front side is key because, audits can go back 3, 4 years. If you've got a customer that, say it was a large customer and they're no longer in business and you're now getting audited, you can't go back to them and get it. I mean, the most states will allow you to go back and kinda collect exemption certificates, but if the person that you needed to collect it from is no longer there, you're gonna be on, you're have to pay that sales taxes. You're gonna be on board for it.
Yeah, I mean, obviously, right, if you get audited that I mean, you are at risk at that point that you can't defend yourself, and so you're liable, and that I mean, that's the real problem is that you could be having a difficult season already, and then if you got audited and all of a sudden there's a claim and a liability that it could just wipe out cash flows that, could be a multi-year kind of issue that all of a sudden you have to pay at one point in time that, yeah, this would not be good, right? And so, um, I think, a part of this is, Robin, and this is how we even got to know each other is, um, a lot of, the audience that we're talking to are ag business operators between, 10 to 100 million of revenue, kind of lower middle market, not huge, massive corporations that probably know some of these things and that have the depth that some of these are maybe navigating this for the first time, that they're expanding, their scope and their operations. Um, a lot of these folks that they work with a local 1, 2, 3-person shop CPA that handles their income tax returns. You and I have navigated this that I have nothing against those CPAs, like, and I don't believe that you do either. That, but I think you highlight in the beginning, but in regards to, wow, there's 12,000 jurisdictions just for state and use tax, and then there's 90,000 for what type of tax you mentioned?
Just any, jurisdictional type tax, government, city, county, I mean, that all have the ability to have some sort of taxing authority.
Exactly, and I think describe for our audience, what could be at risk if, because we experience this, and that's why you and I now have a relationship together, a business relationship that, um, we leaned in to a local CPA firm that spoke about, their ability to provide guidance on SALT issues and felt that there was a lack in it. There was a gap there. Um, why might it be risky or why might it, be disadvantageous for a ag business or, food and ag business operator to just lean into their local CPA shop that, doesn't seem to have a significant amount of debt and salt and, what's the risk and what should they really be looking for to actually get the experience and resources that they need?
Yeah, like you said, I mean, I absolutely, small CPA shops are wonderful. They serve their purpose. They're great. I will have clients that I refer to them if they're not quite my size, to do it. The one thing about state and local taxes, it's a specialty. It's not something, that I've been doing it for 30 years. And I still learn things. And you've got 50 jurisdictions that you're dealing with, whole levels of tax on each one. And unless you're kind of in that kind of day to day and really understanding what the states are doing and how they're leaning and what they're thinking, and they're all getting more aggressive on trying to, you know, find ways to bring revenue into the states. And you, you know, uh, a lot of times that specialty level just isn't within a smaller shop. In fact, I work with some of the smaller shops where they when it becomes to a salt issue, they'll send it to me. There are certainly some issues that they can handle, but if it's I'd say, if you start to get into, audits, there's just a certain way where if you kick an audit off the right way, it's gonna go much smoother than if you're not sure about what you're giving the auditor. So there are certain situations where I would just say, "No, do you" I mean, what is your level of expertise in the state and local area? How long is the person that, that's gonna be helping me been focused on state and local? Is that their focus area? Is that what they do? Or is it if they do that in addition to all of these others? Um, that's really some of the questions I'd ask is, what is their actual specialty in it? How many audits have they done? What have they done here? And just ask some of the questions to make sure that they have it and say like, look, I love you guys for this, but you need to make sure we need to make sure we're getting the service that we need for, because audits can turn ugly very, very quick. State and local tax can turn ugly very, very quick.
Yep. Yeah. I mean, the states want their income, right? And they need to fund various resources and budgets, et cetera. And yeah, I think you highlighted there that for me, in beginning to work with you, I almost felt like it was a rule of thumb in my mind and for our audience that, again, there's 90,000 jurisdictions, y'all, and many of them are very different from each other. There's no way that a local CPA can both be an expert in federal and state income tax for your operation and state income tax for multiple states, as well as be an expert in salt. At the end of the day, they can have maybe a broad level, but and this is not. I'm not banging on CPAs. Like I'd say this of anybody. Like I mean, the same with attorneys or anybody that to expect somebody to be a great generalist and be a great specialist, we all know doesn't work, right? And so that idea that if they're the one doing the income tax returns and they're doing CPA reviews and audits out of their local shop, you're probably not going to find the great depth. Like they may be able to help in state with some state and local tax issues, but you're probably not going to find a real multi-state expert that wherever this business could go and grow and where they're going to sell their goods and services, they're not going to be an expert in all this. And so I've kind of come with the rule of thumb that if the firm doesn't have a dedicated partner like you, Robin, that if there's not a dedicated partner to this, the salt bench is probably a little bit weak, and it's okay. There's nothing wrong with that. It's probably a little bit weak. And so, for these, food and ag business operators that they need to know that, if they're really looking at a multi-state expansion, having somebody, on their bench of resources, you can still stay with your local CPA for your income state, tax returns and all that. But, just, look to somebody like you that, does have that expertise that they can lean into. And that's just what I want to encourage is making sure that our audience also gets the right resources, that this is a difficult and technical area. Um, you can be sold on the idea that, somebody has the expertise. I would say that unless there's a dedicated person with couple decades of experience like Robin that you may be disappointed in exactly how much depth you're really getting, right? So, yeah, at least that's my opinion.
I mean, it's you do it from just pure compliance and kinda making sure you're ready, but also for looking at, what are some actual opportunities that you can get. There's various exemptions, um, to the ag industry, across sales and use, income, or, property tax and that. But again, they're not standard across states. And, if you're looking at a couple of different locations that could be generating income for a new state, there's talking with the economic development folks and saying, "Hey, here's what we're going to be bringing to your state or to your county." You get a couple of them kind of balancing, but if you go in and you kind of have already made those decisions without a state and local person there to kind of chat with you about it, you could talk yourself. You could out of a potential opportunity.
Yeah, 100%. That's a really good point that yeah, you could be looking at all these additional costs, but not understanding what's possible here, right? That again, yeah, I mean, I'm just bringing it back to even more, tangible for me. But we come here and I forget what it's called, but some of the property tax exemptions that you could obtain. I'm Yeah, I mean, I'm forgetting the term. There's a proper term, but to your point, it's having that knowledge too that it's not just about, okay, collecting and paying. It's about what exemptions exist that you really don't have to participate and worry about budgeting. And so the investment now makes sense, right? That you have lesser cost. And so just having this expertise, you're highlighting that, having somebody in the corner that really has deep expertise and really understanding this topic area. And that's what I was hoping for our audience would be to understand this topic area as a whole, but then understand how to get the resources that they need to be successful. Because I mean, we could have dove into particular, state and use taxes of a particular state, but again, there's 90,000 jurisdictions. Like, what's the point that we'd have to have like this very narrow profile of an audience to make sure that we fit this, right? But um, I think, kind of a final question I have, Robin, too, is, um, having a resource like you, hey, you come with many years of depth and experience in working for a firm like Andersen, having those resources. Comparatively, it's not necessarily, a super cost effective investment. It's better than, paying the wrong things, but especially for an operation that's blowing and going, that what would you say would be the right setup internally for them to consider? Because it's not just about asking questions about what are we liable to pay. It's working with the actual entities to remit the payments. Like, somebody's got to physically do that stuff. Somebody's got to make sure that things are collected appropriately, that somehow the accounting systems or ERPs are actually collecting the particular taxes, creating the liability so that those amounts can be remitted. Somebody internally's got to reconcile those amounts and say what was actually remitted matches what we collected and that there's no differences, et cetera. There's depth here, right? What are your suggestions for a growing business in regards to the resources that they should be looking for internally, that you can even lean into, that you can provide your level of expertise as a partner, but yet, there's somebody still inside the business that's able to function and get things going? That what would you say is a great setup for businesses?
Certainly there's got to be somebody inside the business that takes ownership. Because I mean, why, it's your business. You should absolutely be the one taking ownership of it. That doesn't mean you're going to have all the answers. But kind of have an idea. It's like, hey, we're going into a new state. We need to talk with somebody about that. Um, and yeah, if you're starting to where it's like, okay, we're needing to talk to somebody every day. Well, maybe it's or at least once a week. Maybe it's time to sit there and consider bringing somebody in house. For this, and that doesn't mean even that person that you bring in house is going to have all of the answers, but so you just kind of have to look at how are you scaling up your business, and that's not just your people resources, your software resources, and that too, your ERP systems. If you're, shipping product into 50 states, maybe you need sales tax engines to assist with some of the work as well. So it's you just kind of have to, I think, kind of look at what your business plan is, and certainly have somebody in house taking ownership of the tax function, and state tax function, and then as you're scaling up, at some point it might make sense to bring somebody in, but otherwise, consultants are a great resource to kind of help leverage the cost, versus a new person coming in.
Yeah, appreciate you so much, Robin. That, like I said, I mean, we could certainly go deep diving on particular states in regards to this episode, right? But our narrow window of audience, that I don't know if they'd appreciate if their state wasn't talked about, right? So, but what would you say is kind of final key point takeaway for our audience here? That, or is there anything that you feel like, wow, this is a glaring red flag you wish more people would know about in regards to salt compliance and what they should be thinking about? What's kind of a final takeaway you'd love to leave with our audience?
I think kind of finally, if you're taking footsteps into new states, those footsteps could be creating tax exposure. So just as you're growing, just kind of think about what does that actually mean, and do your diligence, on the front end to make sure that you're not going to stumble in doing that.
Yeah. So trigger, if you were going into different states, whether selling products, services, or expanding your operations, setting up a domiciled office, going warehouse, distribution facility, or buying farmland in different states, automatically be thinking, what could be my state tax implicate, or what could be my SALT implications, I should say, that, could be, coming in here and making sure that you're asking and begging the question. So for our audience, love that, appreciate you, Robin, that, there's so much, technical, nuance to this topic area, but appreciate a high level that you're able to help us download and understand SALT, what people should look for in a SALT resource, like yourself, and then what can they do internally. And so just so much appreciate having you on the show today.
Thank you very much. Appreciate it.
Awesome. Well, for our audience, we'll catch you next time. We have some additional episodes coming up regarding ag financing, and as well as additional risk management in regards to financial risk management, ag finances. So appreciate you, Robin, and we'll dive in next time, y'all. Appreciate you.
Thanks, Mason.